Last week, the price of Bitcoin got seriously volatile. Currently, the price of Bitcoin is $27,552. And we're rising in price now. Why is that? Why is the price of Bitcoin rising right now? It's because only a few people have noticed this so far. But today, on Saturday, the Federal Reserve has increased their balance sheet by a further $100 billion, or $94.48 billion is what the Fed has added to the balance sheet this weekend. We can see that in this price chart right here. You've got your initial stock to the upside, just to prove it's not all part of the original pump, which was this one up here. The next week, which is this week, we've now increased the balance sheet by a further $100 billion. This is something that we're likely to see a continuation of. Another thing you might notice, I've had an haircut. Anyway, if you're enjoying the haircut, if you're enjoying the fact the Fed's just printed $100 billion, and that gives us some very, very bullish weeks ahead, drop a like on today's video. I would appreciate it. Trying to get 1,000 likes on this video. We've got no chance of hitting it, but I can ask anyway. So if you wouldn't mind, drop a like on it. I'd be sincerely appreciative. Anyway, price of Bitcoin. It is bumping right now. It's because that print happened only a couple of hours ago, and it's taken a while for people to notice that, and now it's starting to reflect itself in the market. So the question at this point in time is Bitcoin going to have a weekend pump because the Fed printed $100 billion, or is it going to wait for next week? I think that there is a strong chance, we do get a pump up this weekend. Now, there's a couple of key reasons why. The first one would be, if you look at this downtrend that we had here, we've now broken the downtrend. It's undoubtedly we've broken this downtrend at this point in time. The other downtrend that we've broken would be the smaller time frame downtrend that we have here. We've broken pretty much all of the downtrend. So at this point, we're now looking for targets to the upside of which will get rejected off of. So on the price of Bitcoin right now, first of all, your logical level of resistance is this range right here. Upon trying to break back into this range, the peak of this range would be around $27,623. However, we've got a key level of resistance here represented by the red line on the screen. That is a control line represented on this volume range profile at the side of the screen. That volume profile there is basically showing us where we have liquidity in the charts. There is basically no liquidity once you break above this key level here, which is currently sat pretty much at $27,675, somewhere around that level. So a break above $27,675 in theory for Bitcoin should take the price quite significantly to the upside. It should go like this, and then it go like this, and then it goes like this, and just general upwards trending should we break through $27,675. Now, at the same time as that happening, we've got an interesting week ahead on the DXY. Because the Fed is increasing its balance sheets right now, we've got to look at the DXY. And on the DXY, this is my prediction for what I expect to happen to the prices on the DXY right now. So we can see from this chart, currently the DXY is trading at 103, 111. If we look, this is the 1 minute chart, but if we look at the 1 hour chart, it'll reduce the size of what I'm saying. I'm saying basically on Monday morning, we just drop to the downside because of the Fed printing money. This was unsustainable price pumpage, given the news that the Fed basically knows that they have to increase the balance sheet despite increasing inflation. So from my perspective, it's not priced in yet what the Fed had to say with regards to their rate hike on the DXY. I think the DXY was artificially inflated due to various things that are happening on the stock market, in particular what is going on with the banks right now. And I want to show you some bank stocks to explain basically what was happening last week. So last week, or rather on Friday last week, we were able to see, or rather this week, Friday this week, on the 1 minute chart, we don't want to look at that, but on the 1 hour chart, we can look at this. We can see that basically Deutsche Bank stock is crashing right now. This will continue its crash next week. It's undoubtable. Deutsche Bank was lucky to escape a complete and utter collapse on the stock price on Friday. It was really looking like it was going to go, and then it didn't go. But it's important to also point out there is still no confidence in these banks. You can see here, Deutsche Bank finished the day down 3%. This bank right here, which is First Republic Bank, which has already crashed, finished the day down 1.36%. Wells Fargo Bank finished the day down 1%, and Bank of America is the only bank that actually finished the day up at 0.64%. Barclays Bank finished the day down at minus 4.2%, and HSBC finished the day down minus 1.19%. Credit Suisse finished the day down minus 1.23%, and actually UBS pumped, which is interesting. Actually, that's not actually UBS stock, that's a different one. The actual UBS finished the day down 0.9%. That's the actual UBS. I don't really know what that one is. Anyway, with regards to what's going on in the banking industry, Banks are clearly losing consumer confidence right now. This is a cycle. They don't immediately gain back that confidence that they've lost. It takes a long time for that confidence to come back. So you'll continually see bank stocks getting sold off. If you continually see bank stocks getting sold off, and again, these sell-offs take a long time, bearing in mind the size and liquidity that is built up within a banking organization, and they do buyback and burn just like what we do in crypto, they can afford to keep buying that stock. And if they're using company funds to buy back that stock, it'll take a long time for it to crash. But ultimately, there comes a point whereby the bank can't buy any more of its stock back. It doesn't make any sense for it to be buying its stock back at that point in time. And I suspect that's what's going on in the traditional markets right now. I suspect they're propping themselves up in the hope that this round of fear and FUD that people like me are causing right now will come to an end at some point soon. But however, it won't. Because banks are crooks. They take your money, they lend it out to other people. Banks do not back one-to-one. Everybody's saying to crypto exchanges, oh look, you should always back one for one. Why does the same not apply to a bank? When you deposit into a crypto exchange, the crypto exchange doesn't then lend that money out to other people. And if those people don't pay it back, they're then suddenly illiquid. That's what happens in a bank. And if we're going to have interest rates continually rising, that will increase. Basically, we currently have 60% of all commercial mortgages in the USA are up for renewal in the next 12-month period. That means that the 60% of the 30-year terms, but it's not a fixed rate term. It's something that changes and you renew it every like 5 years or whatever it is. Either way, the point is these mortgages are up for renewal. That means that all these people are suddenly either forced to sell their property, which will cause a commercial property price decline, or they are forced to remortgage it on a higher rate of interest, meaning that their monthly payments are going up. That will cause more bankruptcy, it will cause more defaults. There is no good scenario right now for people that are investing in commercial property by using the bank's money. This is particularly interesting because this is basically where most of these banking reserves are built up. If we look at Wells Fargo real estate mortgage loans, they've got $424 billion in real estate mortgage loans, and in mortgage-backed securities, they've got $269 billion. Out of a total balance sheet of $1.9 trillion, that is essentially like nearly half of the balance sheet is in mortgage debt alone. That means if the entirety of the bank wants to withdraw from the bank, they cannot. If half of the bank wants to withdraw from the bank, they cannot. I did the maths in yesterday's video. The answer is, if basically $1.2 trillion of the debt in Wells Fargo Bank is currently built up in the loans, essentially that are on properties and various other kinds of things like commercial, industrial loans, consumer installment loans, and loan loss allowance reserves. It's hilarious that their reserves don't even account for 10% of any of these, maybe 10% of this one right here. But the point is, loan loss allowances and reserves, they don't exist right now in the traditional system. So what I think is going to happen over the course of this weekend, I think that Bitcoin's price is going to pump. Why? Because the Fed's printed $100 billion. That news is yet to make it out into the traditional markets. They print on a weekend so they can't affect the markets and people have got time to digest that information. I expect the DXY is going to crash on Monday. I am currently positioned long myself on Bitcoin. I'm also long on Ethereum and long on a few other altcoins. Now, when it comes to Bitcoin and Ethereum, I want to explain what is going on with the Ethereum versus Bitcoin dominance chart. Now, yesterday, we saw some significant declines, then some significant pumpage. I think that Ethereum versus Bitcoin has pretty much bottomed out at this point in time. I believe this is a bottoming out formation, and I think that at this point in time, it's highly likely that Ethereum starts gaining value against Bitcoin. Bitcoin is coming to the end of its market dominance period, and people are going to start to look for alternative investments other than Bitcoin to make money. At the same time, banking organizations and traditional people will continue to put money in Bitcoin. I just think this is really building up to an altcoin bull run at the same time as having a Bitcoin bull run. Don't forget, when Bitcoin went up to $60,000, also going up tens of thousands of percent. At the same time, I watched an interview this morning with Paolo Ardoino, the founder of Tether, and he was basically saying, look, it seems pretty realistic this year that we see the price of Bitcoin at $60,000. If the CTO of Tether, one of the founders of Tether, one of the richest people on earth, says Bitcoin is going to $60,000, you do not ignore that man. That man is somebody to pay attention to. That man has been here before any of us were here, and he invented a stable coin, printed loads of it, bought loads of Bitcoin with that stable coin, sold all the Bitcoin, and then suddenly had it backed with cash, and then it became the most used stable coin on earth. The founder of Tether is saying Bitcoin to $60,000. I agree with him. Let's have a great year, get that positive mental attitude going, and at the same time, Fed's printing. We like that. Have a great day, everybody. Drop a like on today's video. Trying to get 1,000 likes. Of course, if you are interested in trading, watch the trading tutorial that you'll see on the screen somewhere. And have just a fantastic Saturday, everybody. Thank you for watching. See you in the next video. Subscribe.